What if I told you Kenya's financial markets just pulled off the impossible? This is Kenya News Update today. Coming up, you'll discover how ordinary Kenyans with M-PESA are beating Wall Street at their own game, and why this financial revolution has a ticking time bomb hidden inside. Meet the 96% of retail investors who just poured billions into something nobody saw coming. In 2025, while global markets were crashing, Kenya's bond market quietly became the best performer in the entire capital market. But here's the twist. This isn't just about money. It's about a perfect storm of policy, technology, and desperation that's rewriting the rules of African finance. And then, something shocking happened. By the end of September, the secondary market had turned over more than 2 shillings trillion. That's more than the entire amount for 2024, with months to spare. This seismic shift shows a massive flight to safety as stocks become volatile. But here's what nobody's talking about. The government is using this retail boom to solve a massive debt problem. Infrastructure bonds became the main event. In August and September, 15 and 19-year tranches were reopened. The target was 50 shillings billion. The bids, a staggering 207 shillings billion. That's 415% oversubscribed. These sweet spot coupons of 14-18% are like honey to investors, drawing them away from short-term treasury bills. It gives the treasury breathing room to roll over debt and slightly lower its weighted average cost. The money fuels Vision 2030 projects, roads, energy, housing. But here's the part that will blow your mind. This frenzy is driven by you, the retail investor, through a digital platform called Cent DAO CSD. And the proof? Safaricom's 20 shillings billion green bond. It wasn't just oversubscribed, it was obliterated. Bids hit 41.4 shillings billion, 175% oversubscribed. And 96% of those applications? Individual investors, many using M-PESA. This proved the Nairobi Sustainable Finance Framework works. Strong brands with clear use of proceeds, like funding network solarization, can get Kenyans to support climate goals without big concessions. But if this is so good, why are experts terrified? The rapid change has raised red flags about concentration risks and sustainability. Public debt is 68% of GDP. The high premium rates on those long bonds, they show Kenya still pays a huge duration penalty in a high-rate world. Government gets breathing room, but it risks crowding out private credit. The infrastructure bond frenzy is a double-edged sword, funding development today, but potentially starving businesses of loans tomorrow. Some say this is financial innovation at its best, democratizing investment. Others see a dangerous bubble, where retail money props up government borrowing at unsustainable rates. The implications are massive. If this retail wave reverses, the entire market could face a liquidity crisis. But if it holds, Kenya could become a blueprint for African capital markets. So, do you think this retail bond boom is empowering Kenyans or setting up a dangerous debt trap? Drop your take in the comments. Subscribe to Kenya News Update today for more on the forces shaping Kenya's economy.